Okay, welcome back to the YouTube, guys. Hope you had a good New Year, Christmas. We're gonna kick this off with episode 3 of the sequence. This is gonna be advanced C3 anatomy. Now, of course, you hear a lot about C3 this, C3 that out there, but nobody knows how to effectively trade it, right? What's the highest probability way to trade it? And after this video, you guys will know exactly how to do that. And if anybody tells you otherwise, it's nonsense, okay? This is the way you trade it, okay, effectively. How do you go into the market and actually trade this candle? This is how you do it, okay? So what are we going to be covering here is premium and discount, first of all, high time frame key levels, internal and external range liquidity, and how to actually trade C3 in the highest probable way, right? This isn't the only way you can trade it, but this is the highest probable way. And if you only stick to this one way of trading it, you're going to see a lot of success. Go back test this and forward test this and prove me wrong, right? Don't believe what I'm saying here. Okay, so let's start off with the monthly to the weekly. Okay, so when you have that C3 candle, right, this here after the candle closure or after body closure, within this candle on a monthly C3, you're looking for this on the weekly chart within this candle. Okay, this is the trigger for this candle here. You see the open low, that is this right here. It's running out of previous weekly low. Is this going to happen every time? No. Is this the highest probable way to trade this? Yes, 100%. There's no doubt about that. And also what you're going to watch out for is SMT with this, right? So where one asset, for example, let's say this is NQ, right, or Euro, runs this low, okay, GU or ES might not run the low. Okay, so you got to keep an eye out for that. Let's start off with, that's a bearish example, and this is the weekly C3. Okay, so when you have a weekly candle on this here, C3, you're looking for this to form on the daily. Okay, so the open low is this right here. Bearish example. And then daily. So you've got a daily C3 here, open low, that is running out a previous session low. So if this is Tuesday's candle, for example, this was Monday's, this on Tuesday is going to run out a previous session low from where? It's either going to do it from within the daily candle of C3, meaning it could be New York running out London, or it could be a previous session low from the previous day. So it could be a previous New York session low running out here on London and or Asia, okay? So that's what you're looking at, and a bearish example here of the daily C3. Okay, so let's kick this off with DXY here. Okay, so we've got to blend in a few concepts here. We don't just go and pattern trade this like everyone else does. You're going to build in a context and narrative behind this, as well as higher time frame, key levels, and premium and discount. So if we look at this candle here, okay, this was the C3 because you get the candle closure here. We're going to blend premium and discount. So from this high to this low, we're clearly in a premium here. Okay, we're at a higher time frame key level by the highest up close candle, the order block here, okay? And then you've got an external range liquidity run here. Now, all of this can be blended in really high probability on the higher time frame when you include my higher time frame teachings with COT, etc. Okay, so we run out the external range liquidity as well into the higher time frame key level. So what do we have here? We have inducement run into key level in a premium. You guys should know this from my teachings. And then you get the candle closure right here. You can see this candle right here runs the previous candle and closes within. Okay, so we're looking at this candle here. Okay, so let's go and digest the open high of this bearish candle here and how we can actually effectively trade this one candle. Okay, so that one monthly candle is made up by these 4 weekly candles, right? 1, 2, 3, 4, that makes up the month. Okay, so we've got the candle closure here, and going into the next month, we're looking for C3 shorts. Okay, so what are we looking for in the weekly chart? We're looking for a previous weekly high to get taken out for that monthly C3, and you have that right here, right? So the previous weekly has been taken out here, and then you see the sell-off for the monthly candle. Okay, this is how you effectively trade it, and this is how you'd go into this and look for the shorts. So if you look at this here, now we've gone above, right? We're already in monthly C3 here, okay? And then we've run out a previous week high, so the sequence is in play. And then we see the market start to trade lower, you start to get displacement, and every fair value gap starts to hold, and you can see then that's when the monthly runs out the external range liquidity. Now, I want you guys to take note of something here. All examples I'm going to be sharing here is within the same drop here on DXY. That is really important. So we're working off of monthly C3 here, with this being the weekly, the monthly sequence with the weekly getting taken out. Now notice, on the same example, and this is how effective this is, okay, we have a weekly C3. Okay, so here you have 1, 2, 3. You've got this third candle, because this one wicked inside into a key level, right, in a premium, right? And then you have this weekly C3. So how is this weekly C3 going to form? Right? So this open, high, low, close. This is how easy this can be when you use this sequence, right? Nobody has given you this kind of clarity with this. You're just simply looking for a daily stop run here, okay? So notice here, this is the weekly candle, 1, 2, 3, 4, 5, Monday to Friday, right? That makes up the weekly C3. So what are you looking for within this weekly candle? You're looking for a previous day high to get run that sets the stage for the market to tank then for that weekly C3, right? So if we look at this here, we have a previous day high run here, and then we see the market sell off. That's what sets the stage as the sequence. Now, why did it not do that from the run of this? That's where you have to blend in other concepts, which I have already taught, which is when we're looking at the weekly candle, right, we're looking at one shot, one kill. We're looking at the weekly profile. We're looking at the economic calendar. So if you look at the economic calendar of this week, this is where CPI was. Okay, so because that's the largest, biggest news event, and we're up here towards the highs, it's ideal to expect that weekly sequence to form on Wednesday. Okay, now, yes, others will teach you this in hindsight. They'll tell you about this stop run here and why this one made more sense, but it was never done or called beforehand. That's where it differs with me, and you guys will see that I'll be sharing an example of that. Now, there the previous day high gets run, okay? So we're in the sequence for the weekly candle, okay? And then we see the market trade lower. We get the change in the state of delivery with the closure below the two up close candles that run the previous day high. Body closure there. You're already in a change in the state of delivery. Now the sequence is completely in play with confirmation as well, and the market should run lower. Okay, so we trade back up into the order block as well as a IFVG here, and a very small, if you see that right there, fair value gap there, and then it sells off. Okay, so within the monthly, weekly sequence, it's within the same example, okay, within the same price move. This is why it's so fractal, and you can keep doing this all the way down to an intraday execution. Like you can say this is a weekly execution, right, for a one shot, one kill. Here is the call out, right? So none of this is in hindsight, okay? Unlike everybody else. Everyone else's teachings on this is completely 100% in hindsight. You will never see me do that. Never. Now, we're in a daily C3 here as well, because you've got the 1, 2, 3. So how is the daily C3 going to form? Right? It's going to run a previous session high. So you can fractalize this, and I've shown this to you all from one example. Right, from within the monthly candle being C3, the weekly within that monthly, the daily within that weekly, and now the session-based trade within that daily candle, all within the same one monthly candle. You then have a previous session get run here. So you've got premium and discount here, right? This is London session, right? So how is the daily C3 going to form? It's going to run out the previous session high. It runs out the previous session high here, okay? Runs this out one more time for 3 drives. We don't get a change in the state of delivery here, so there's nothing. There's no PD array as well. When we run this high out, we close below the highest up close candle, right? This becomes a CSDOB. We then sell off aggressively, running out London session lows and completing the daily C3. Okay, so really important there to take note that all of the examples were within the same candle, monthly candle. I fractalized one candle all the way down from a monthly, weekly, daily to the session-based trade, right? That's not cherry-picked, and that shows you that the sequence is fractal and is being applied on every time frame on the way down. Okay, so it's really important to note that and to use that in your backtesting. So this is the easiest way to actually go into the market and trade it, right? Anyway, thanks for watching, guys. Episode 4 will be up in a couple of days. If you want more educationals that you don't get on YouTube, as well as a market review of every week's price action, there's a link in the description, completely free, 100%. And I'll catch you guys in episode 4.